Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, January 21, 2015. You're looking at a daily chart of the SPY, and we had another follow-through day today on the upside, and looks to me like the market wants to get into these moving averages. Now, the wild card is tomorrow. You have the long-awaited ECB announcement. Mario Draghi is going to announce the European Central Bank's form of their quantitative easing answer to what the U.S. has done and what Japan is doing. Now, today, apparently, some news or expectation about his announcement leaks out, and apparently they're saying that they're going to do $50 billion a month for the next year, or at least the remainder of the year. I don't know whether that's enough or not enough. I don't know how the market's going to react to that. But what I do know is most likely that information didn't leak out. Most likely what they did was float out something beneath what they're expecting to announce tomorrow so that the market could react positively to the announcement. That's what they're after. They're after the object of their game is to inflate the markets, okay? In order to inflate the markets, they're not dumb people. They may do the wrong thing most of the time, but they're not dumb people. They understand that if the market perceives what they're announcing tomorrow is not enough, and quote-unquote, the ECB misses expectations, okay, all the work that we did on the upside over the last few days is gone, and the market's probably going to head down and test 191.5 to 190.5 by, sometime by, mid to late next week, if the ECB disappoints and the market perceives it that way. But nevertheless, right now we had that trend line that we built in here. Okay, that's kind of off the table until we get back down there, so I didn't draw it in again tonight. But it looks to me like the market wants to head for these moving averages. But again, tomorrow is a wild card day with the ECB. And then you have Greek elections over the weekend. I think that's nonsense in particular. But if the market's looking for an excuse, it's going to find it there no matter how it goes, one way or the other. If they want to use the Greek elections as an excuse into next week, they'll do it. So the market was up today, S&P, and the Dow is up, but check this out, okay? What do we do when we look at our favorite market indicator, the IWM, Russell 2000 Small Cap Index? The Russell was down today, okay? So the Russell was down, the IWM was down 37 cents today. Doesn't sound like a lot, but on a day when the S&P is up 0.5%, it doesn't look pretty when the Russell was down 1/3%. Okay, so I noticed something similar last night, and I noticed the same lag tonight, and I told you that we're going to keep an eye on this lag and see if it further develops, and it may be furthering to develop. Therefore, if the IWM continues to diverge from the S&P, I'm going to give the IWM the nod and say that the market's going to experience some turbulence on the downside if the IWM, continues to underperform. So we'll see what happens tomorrow with the ECB announcement. That'll be a good telltale. The market's going to either finish strong or it's going to have a problem with whatever the ECB announces, and it's going to, get into maybe a couple 3-day correction. Remember, I told you that the end of this week is another daily turn period, which should be good for 2 or 3 days at least in the market. So maybe we spike up tomorrow and turn slightly down on Friday just to work off some of this. We'll see what happens. Don't know. Well, I meant to show you the SPY chart, but let me go back there a second. Let's say the market goes up into the moving averages tomorrow. Okay, then you will have had a reversal and then a 1, 2, 3. It would be the 4th day up, including the reversal. That's 5. You can even count this as 6. You would be getting long in the tooth for the market to pull back for 2 or 3 days at least if we went up into these moving averages tomorrow. So that's just my take on what to look for over the next day or so. Not much to talk about in crude oil, but let's go over to the USO, and we'll just have the same conversation we've been having. There's no low in crude. Right now, the March contract is trading at 47.28, chopping around. Haven't made a low, have no defined bottom, have nothing to trade against. Therefore, there's no play in oil, no play in the energy sector until we see such a time that we can call a definitive low in the price of crude oil. And I know it sounds like a broken record, but for those of you just joining, there's no defined bottom in crude oil nor the USO. Therefore, we're going to stay away until we can identify a high volume reversal day or something that the market's telling us it's putting in or has just put in a bottom, and then we'll take a look at it and go from there. GLD. Thought the action on GLD was interesting today. Now remember, this is important, okay? What I was telling you the target is all the way, first I was telling you 1240 to 1245 when we were down here. This is the GLD, but that was going to put us up into this 119 neighborhood. Okay, we got right up into the 119 neighborhood, and then I said, a couple days before, I said, or higher, okay? And the market started to act really well, and we went the or higher. Then I said the next target is going to be 1300 to 1310. The market got, during the day today in the morning, to 1307 and reversed down and is now at 1289. And you can see this can be classified as a reversal day, although not a high volume reversal day, but this is on the cusp of a reversal day. It's nothing that we're going to need to worry about yet, but all I know is that the GLD or the gold futures contract needs to come back closer to home, even though, home being the 20-period moving average, even though the moving averages on the daily are starting to turn up, or they have turned up in earnest, okay? That's good for the bulls in gold. That's good for the longer-term price in gold. But right now, you got to come back towards the 20. See how you never really get too far away from the 20? Okay, you hug it, get a little bit far back to home, a little bit far back to home, a lot far back to home. We're a lot far. We're coming back to home one way or the other. Either home comes up and we stall out, or the market pulls back closer to home. But that's inevitable. That's going to happen. I think 119 and a half to 120 is a good area, maybe even 120 and a quarter for the next pivot low, which would be this pivot high here, coinciding with this gap window here at here, the exact number would be 120.34. So I'm going to say 120 and a half to 120 and a quarter. Depending on how it gets there, we're going to start looking at GLD to pick it back up. By the way, I'm out, full disclosure. Okay, got out yesterday late in the day. And, today we saw the reversal. That's just luck. I didn't know that was coming today, but I do know that we have to come closer to home. So I'm out and I'm waiting for an entry based on the next pattern. Gold's telling us what it's going to do. Let the market tell us what it's going to do. We don't impose our will on the market. You know what? I think we're going to leave it short tonight. That's everything I wanted to cover. We'll see what the ECB has to say tomorrow, and we'll take it from there, one day at a time. But not much has changed in terms of the market. We were looking for a multi-week rally from a low in January, and we're still not convinced that we saw a multi-week rally underway yet. But if we can clear tomorrow, it's a pretty good indicator that we're going to see another week or two of upside in the market. Can we make new highs? Don't know. We'll know more as the days go on. It's not really important right now to know if we can make new highs. First, we've got to clear some hurdles like this area here, and then you're going to come up to the highs. So we'll see. We'll take it one day at a time. First area to clear would be the convergence, or it looks like a convergence, almost a convergence to these 20 and the 50 period moving average. So right in this 204 to 204 and a half area is where the market should find a fair level of resistance next, which is about $1.5 away from today's close in the SPY. That would coincide with roughly 15 points in the S&P. All right, folks, I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.